Good evening. Can you hear me? We'd like to start the call to order the meeting for the Finance and Governance Committee for February the 14th, 2023. Okay, and Madam Clerk, roll call and posting of the agenda.
Member Tehran,
Here.
Chair Zaragoza,
Here.
we have quorum. The meeting agenda for this meeting was posted on the City Hall Bulletin Board on February 7th, 2023.
Thank you. Please join me in saluting our flag. And also a moment of silence for all the individuals at the earthquake and also the young folks in the university the other day. Moment of silence after that. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Okay. Okay, Madam Clerk, any speakers for items not on the agenda?
Mayor, we do not have any speakers virtually or in person.
Okay, thank you. Then our next item is item C. This is a consent item, Mr. City Clerk. Approval of the minutes, that the Finance and Governance Committee approve the minutes of January 24, 2023 regular meeting as presented. So what do you think, Councilmember?
I will move to accept the minutes as presented.
Okay, and I'll second that. And we'll vote.
And Mayor, we do not have any speakers for this item virtually or in person.
Okay, so we'll vote on this item.
Motion carries 2-0.
Thank you. Our next item is reports D1, the Finance Department, fiscal year 21-22 annual comprehensive financial report and summary presentation. Recommendation that the Finance and Governance Committee receive and recommend that the staff proceed to the full City Council with fiscal year 21-22 annual comprehensive financial report, the ACFR, and summary presentation from the city's external financial auditors, Eddy and Payne, LLP. And we'll go from there. So we have, okay, Sherry.
Mayor, we have with us today the acting CFO, Denise Olson, assistant CFO, Beth Vo, and city controller, Cesar Perfecto. And they are able to answer questions. They prepared all of this on the city side and did a tremendous job and a lot of work on this. So kudos to all of finance staff that was involved in this. And we also have today with us Eden Casareno from Eddy and Payne, and she'll be giving the presentation this evening, our auditor. Thank you.
Okay, so, okay, go ahead, Eden. Welcome, and welcome to Oxnard, and it's nice and windy and cool today. So,
too close
welcome.
Thank you, thank you. Honorable Mayor and Councilmember Tehran, thank you for having me here tonight. Councilmember Tehran, it's been a while since I've seen you. You have some more gray hair than before. So we have slides, right?
Okay, Diego, no? Do you have any slides?
Oh, no.
So before we continue, before we continue, one of the things that I just want to share with you that, and you're probably going to speak about this, and this is that we have some significant audit matters that you're probably going to share with us, you know. So, and for example, you know, the deficit fund balances and the pension of the OPEB, and also the commitment and contingencies and risks and uncertainties.
Yes,
When you share this, I think it'll be really kind of nice to slowly go through that for us, number one, and number two, because that way our residents can understand it, and myself too. That's a tremendous amount of work that was put into this. And of course, on the estimate side, you have allowances and doubtful accounts and pensions and OPEB, which is all part of the self-insurance part that we were talking about. Depreciation and accumulated depreciation, expenses that.
I will go over that in more detail than I thought I was going to.
Yes, nice and slow so we can understand it, especially a person like me.
Yes, thank you for reminding me that.
Thank you, thank you. Okay,
To the finance department. It's in the agenda. Oh, okay. Yeah, maybe we can just view the slides. I don't have it with me right now. We can just,
yeah, what do we,
oh, okay. Because if we. if
Oh,
you
there we
have-
go.
There it is,
okay, good,
yes.
okay.
Yeah, we can view it from the
Can,
agenda.
can you work from there, Eden?
Yes.
Okay, good, thank you.
Okay, so, so thank you again for having me here. I will be presenting the results of the audit that we have done for fiscal year June 30, 2022. If you can get to the next slide, please. This is going to be our agenda. We're going to talk about the independent auditor's opinion, the significant audit matters that, Mr. Mayor, you have said I should go over. The ACFR highlights, which would include highlights of the, oh, thank you. The financial statements that were presented in that ACFR. And then we'll talk a little bit about revenues and expenditures in the general fund group. So it's a short presentation, I think, but if you have any questions,
Okay.
feel free to stop me when you need
Okay.
to. So the first slide here, independent auditor's opinion. Again, we have a clean opinion. Kudos again to your management and to the entire city for receiving a clean opinion. This is the highest level that we can provide to you. It means that the financial statements that were presented to you in the ACFR is in accordance with the generally accepted accounting principles.
And Eden, you said to stop you, but this part right here is extremely important for the public to understand that clean opinion is really important. And this is through the AAS, the government standards, which I think is extremely important. I just wanted to say that before we continue. Very important. Thank you.
Yes, it is very important. And this clean opinion is a product of the due diligence of your finance department, as well as those who were involved in the audits, as well as in the financial reporting process, like utility billings, for example, Public Works, the attorney's office was involved, the city manager's office was involved in all of this work, human resources, housing. So everyone in the city have put their your efforts into preparing these financial statements. Obviously, the finance department put it all together. So I just wanted to acknowledge that.
Thank you.
As far as significant audit matters, I have listed a few things in here. I wanted to go over accounting estimates first. So accounting estimates are very important in any audit. That is why we as auditors are required to report and disclose them to you, anything that's significant as far as estimates goes. Management makes estimates, or I would say these are approximations of financial statement items, such as receivables or payables, and then also your capital assets. So there's estimations, approximations that are inherent within the financial statements, and we want you to make sure that you know what those are, because the measurement or valuation of those accounts may be uncertain, so they could change in the future, and it could be based on assumptions that may change depending on the judgment that were put into the evaluation, right? So the first thing that is there is allowances for doubtful accounts. So you have receivables like loans, for example, or utilities receivables from customers. The collectability of those receivables are estimated based on historical experience, for example, or information that your management know about regarding whether they went into bankruptcy or whether they have been paying all along. So those estimations are included in allowances for doubtful accounts. Again, that is an estimate of of the collectability of accounts receivable.
Are those,
and notes
those
receivable.
called accrual? Is that, would it be the accrual?
Yes,
Okay.
correct.
Okay.
So pension and OPEB, pension liabilities, pension expenses, those are also estimated because pension and OPEB liabilities are estimates of how much you're gonna owe over the lifetime or retirement of that person that you have committed this amounts to, right? So these are based on actuarial assumptions and assumptions that are related to inflation rate, for example, or investment return of plan assets, or even the rate of payroll increases throughout the year. So the years that they are going to be serving the city. So all of that are estimations that are disclosed in the financial statements that you need to be aware of. If those things change from year to year, the liabilities and the expenses will be affected. Self-insurance claims payable, these are also based on actuarial valuation, and they are based on, again, assumptions and judgments where your actuary can say, okay, we needed 70% of all the claims payable to be reserved, or it could be as high as 75 or 85. Depends on what they think you need. So, and management has to agree to that.
Okay.
Depreciation expense and accumulated depreciation, this is a little bit easier. These are based on estimated useful life of capital assets. So based on whether a building will last 30 years versus 50 years. So the depreciation expense is recorded over those number of years that they are used by the city. So it is important to know those because they could impact your financial statements in more ways than you think. As far as significant disclosures, so significant disclosures are in these financial statements that were provided to you. There's deficit fund balances are in page 108. I don't know if you have them in front of you, but I can go over that. Sorry. So on page 108, we have 6 funds that have deficit fund balances. That means that the liabilities of the fund exceed the assets of the fund. So there's public liability and workers' compensation are 2 of the bigger ones that have deficits. The cause of that deficit is that, in the past, you have implemented very conservative actuarial assumptions regarding the claims liabilities, including incurred but not reported claims. They are getting replenished already as we speak. We have been working on that for a few years now. So hoping that that should go down from year to year. The deficits in utility customer service, information services, and facilities maintenance and equipment maintenance. By the way, these are all internal service funds. So really, this should be spread over the entire other funds, because this is mainly using city resources for all different funds. The source of those deficits are definitely more on the employee pension and OPEB liabilities, and they will be liquidated with revenue received throughout the future years. So it's not really very big as far as the others are concerned. Disclosures on pension and OPEB related items are on pages 109 to 130. This is probably the biggest note disclosure in your financial statements. It's almost 20 pages, almost 20 pages. And it is a little complicated. The accounting is complicated. The actuarial valuation is even more complicated, and I don't really try to understand how they do it because I'm not an actuary. But the accounting of that is complicated as well. So it's good to know what inputs are included in the amounts that are reflected in your financial statements. And I must say that your OPEB and pension liabilities are the biggest liabilities that you have in your financial statements, other than maybe the long-term debt.
Well, go ahead, Councilmember Turan.
Thank you. And just regarding the pension and OPEB, would you say that'd be true for other governmental organizations throughout California as well? Or is Oxnard unique in that situation?
No, this is not unique to city of Oxnard. All the cities, all the governments are struggling with, or not really struggling, but dealing with, the pension and OPEB benefits that have been promised to their employees, and they have to put that as liabilities. And every year it changes from year to year whether it's going to go up or going to go down, and it depends on a lot of different factors. This year it actually went down, and that's because of the valuation of OPEB and pension is behind by 1 year. So they value it in 2021 for reporting in 2022. In 2021, there was like a big investment return. So investment returns on their plan assets was high. So the liabilities that were spread over to the members of the plan went down. But in 2022, which would be reported in your 2023 fiscal year financial statements, I think it would be the opposite.
Can I add a little bit to, the percentage that we're looking at across, for liability? Most of the agencies are, what, about 60, 65, or 70, or?
In terms of funding,
Yeah.
you mean? I think overall it has increased to, I think CalPERS in general, and I can't say for other entities.
Yeah, CalPERS, right.
They're, I think, in the 70 to 80% now. So in terms
Interesting.
of funding, I think the city, if I can find that somewhere here quickly. It would be, sorry, I gotta look at it. So in terms of funding, you are at 84%
84?
this year.
Wow.
Whereas in the past, it was like in the 70s. That's for the miscellaneous plan. You are at 88% for the police plan,
88 for the police plan?
and then 88% for fire.
Okay.
And then for the retirement enhancement plan, it's 82%.
Thank you. Yeah.
Yeah, so it is going up. People are, dealing with, they're making sure and talking about how they could fund this more. And I think that is a product of having known what is the liability. Because a lot of time, I mean, in the past, before it was being accounted for in the financial statements, we know it was big, but we didn't know exactly what it was. So now I think people are concerned and looking at that.
Good, thank you.
Commitments and contingencies, these are related to construction commitments, encumbrances. So these are not really included as liabilities in the financial statements, but these are just disclosures that, hey, you still have these commitments to do construction. You have all of these encumbrances that are going to affect your next year. So those are the commitments and contingencies that you need to know about. That's on pages 133 to 134. And then risk and uncertainties. This is a list of litigation that are ongoing and have been resolved. Actually, some of them have been resolved. So there's 6 items in there. I'm not going to go into a lot of that unless you have any questions.
Eden, on the depreciation expense and accumulated depreciation, do we have assets, of course, that have been fully depreciated? And the other question is, all the depreciation from all assets are then accumulated and expensed accordingly?
Correct, yes.
Okay, I just, because we have some buildings or some assets that have really been fully depreciated.
That's right.
Over 30, 40 years, whatever the number is.
That's correct. So anytime you're still using those properties and capital assets, they're still within your books, but they
Okay.
could have been fully depreciated.
Okay, thank you.
Okay, so what else is there? So do you have any other questions on significant audit
Any other
matters?
questions? No?
So more significant audit matters. So challenges encountered during the year. We didn't really encounter significant challenges, but I gotta say that we had a slight delay in presenting this to you. We were, we always try to issue our report in December, but this year we issued it in January, just 1 month. But I always feel like I needed to report that. The city was implementing the ERP
Right.
system, transition when we were also doing the audit. So they were busy with that, and we were busy with our things as well.
And we were all in training.
Yeah. So, but we also have on our end some staff turnover. That's why you see me here today by myself. Our entire team for the city of Oxnard had changed. So,
Oh, yeah.
except for me, I'm still here, and I'm not going away until you fire me. Just kidding. Audit adjustments. So we have audit adjustments that we have presented to management after we have done our audit. None of them were material individually or in the aggregate to the financial statements, and most of them had been corrected,
Oh, good.
except for 2 that I noted in the letter that we had sent to you. The first one was $199,000, which was an understatement of lease revenue. And then the second one was $975,000 estimate of accrued liabilities in the water fund. These adjustments were passed because we discovered them very late into the audit. We actually discovered them in January, and so we have the financial statements almost done, and we didn't want to delay the issuance once again, another couple of weeks, just to make these entries.
So we just had a couple of adjustments and,
Yeah, so these entries are really we did not consider them to be material to the financial statements as a whole, or even individually in the opinion unit that they are reported in.
great.
So Accounting pronouncements, we had a new accounting pronouncement called GASB 87 that related to leases. This pronouncement actually required that all your leases be treated as financing transactions. So if you had a lease where you are the lessor, meaning you are renting out some property or land or something, you have to record a lease receivable for the present value of the lease over the period of time that it's supposed to go on. And if you are a lessee, meaning you're renting out or leasing an equipment, a building, or some other tangible asset, you are required to report a liability for those. So after much, evaluation by your finance department, they came up with only $603,000 that are lease receivables, and there's an adjustment also for deferred inflow of resources related to those of $700,000.
And even the GASB 87's been around for a few years,
Just
right?
this year.
Yeah, right. It
So
just-
this is the first year that it's been implemented. It started out probably in 2018 when it was discussed.
You're right.
Yeah, but they had to extend the implementation as people were complaining about it. Next year, there is a similar one that is going to report the IT software subscriptions.
Councilman Tron?
I have a question about that now, too. Just so I can have this straight for myself, what you just referred to with the leases. So if we are the lessor where we have a tenant, let's say it's $1,000 a month over a 2-year lease term, then our receivable would be $24,000, and that would be the life of the lease is what would be accounted for, correct?
Partially correct.
Partially
So,
correct.
yeah, so you're going to calculate the present value of that $24,000 now, right? So there's an interest factor that needs to be calculated. And I don't know, sometimes GASB comes up with this, pronouncements that sometimes doesn't really make sense, but there is a sense to it. There is they're considering all leases as financing. So you have a liability or you have a receivable because of these transactions. And they want you to calculate the interest.
Okay. All right. And then, so maybe we're going to get into it a little bit more, but with the software licenses, which is essentially the business model that all of the larger software companies use now, is licensing, where you don't just purchase a product, then you own that until you upgrade in the next 5 years or so, but rather you have an annual license or you're licensing the software for a period of time.
Correct.
Would that be now a liability for us as well if we're?
Correct.
Okay.
That's right. So that would be for 2023 year, and I think you have a lot of those. And, we were talking about that just this morning. So that will be implemented in 2023.
Okay. All the more reason to continue to streamline our IT operations, it sounds like. Okay.
Yeah.
Great. Thank you. Thank you for that.
Good, thank you.
Okay, the internal control report, we haven't really issued this one. However, let me tell you that during the financial statement audit, we did not find any internal control findings this year.
Okay.
Yay.
Good.
The report will be released shortly, like March, we're thinking, along with the single audit report. The single audit report, we're still ongoing with the single audit itself, so we haven't issued that report. It will be issued in March, and it will contain the internal control report for the financial statements, and then also compliance and internal control regarding the grants related to federal awards, and then it will also have the status of prior year findings. So watch out for next month. I will be back for that. Did I went too far? Ooh. Sorry, I got lost. Here, okay. So we're now on page 5. So slides 5 to 8, I will focus on the city's financial position over the long term. And then we will talk about the general fund too, which is more of a shorter term look. The long-term financial position is represented in the government-wide financial statements. Those statements are located on pages 25 to 27 of the ACFR. These statements are designed to provide a broad overview of the city's finances, similar to a private sector business. The focus of these financial statements is to report all financial resources and obligations of the city. So it has like long-term assets, like capital assets, and then long-term liabilities such as long-term debt or bonds, for example. So between 21 and 22, there was an increase in net position of $65,000. So an increase, $65 million, sorry. It's an increase in net position. That means that the city's financial position had improved $65 million. So over time, net position could go up and down, but overall, in the past 6 years at least that I've seen, it has been going up. So you can see that in the statistical section, pages 190 to 191, where we have a 10-year, report on the net position. So I think that speaks well to, how the city has been managed in the past 6 years at least, that net position has been going up.
Great.
So we will go over some of the factors that led to that increase. But I'd like to point out that in the financial statements or in the ACFR, there's a management discussion and analysis that really digs deep into some of the variances between last year and this year. I think it's a very good read. That's on pages 5 to 24 of the ACFR. Mm-hmm. So more on the governmental activities here. So your government-wide financial statements is divided into governmental and then business type. So talking about governmental activities, governmental activities actually provided most of the increase in that position for the whole government. General revenues increased by $50 million or about 30%. That's because of sales tax. And this year you had a benefit of a full year of Measure E. Mm-hmm. And so sales tax actually doubled from 2021.
Oh, great.
Mm-hmm. There was also a modest increase in property taxes. There were increases in operating and capital grants and contributions. Obviously, like we received some COVID grants and things like that. Those are additional resources for the city in the long run. The decreases came from.
Eden, Councilmember Tron has a question here. Go
Oh,
ahead.
sorry to interrupt.
That's okay.
Would our American Rescue Plan funds be considered part of what you had just referred to for the operating grants and contributions or capital grants?
Correct. That is
Okay.
part of that. And I think you received,
59 million?
not this year. You received only,
The following year.
Oh, that's right. We received half than half.
yes, half. Yeah.
Okay. Thank you.
Yeah, so you will receive that in the next
Okay.
couple of years, I think. There were decreases too, like charges for services went down a little bit, and then other income decreased. So if you look at this, I like that. I thought it was going to be a red thing. So charges for services was 10%. In the past, that was like 20%. So this includes like business licenses and things like that.
Was that because of the pandemic or part of it, or what?
Part of it's that, but also I think there's like a charge that was discontinued this year. Is that correct?
Councilor, go ahead.
I can't remember, sorry.
Sorry. Good evening, Mayor and Member Turan. I think the charges and services in this category also include like the EMS, fire services that was budgeted but wasn't used. But here you're comparing the pie, and the charges of services was much bigger in the pie prior year, but here you have a bigger, you have a smaller share because your sales tax base increased in that pie.
So that reduces it, okay,
Yeah.
okay.
Okay.
Councilman Turan?
And I was just wondering if other charges would be things like our penalties for our enterprise funds. Are those considered income in there, or are those categorized differently?
That's a different, the utilities are in a different.
That would be, this is
in a
general.
different.
This is general
the
fund.
business
Okay.
tax.
Okay.
Thank you.
Yeah, so operating grants and contributions, sorry. This one over here, that is 16%. Last year was only 11%. So that one increased as well. Property, okay, so sales tax, 39% now. It was 27% last year.
That's significant.
So it did have like a bigger impact this year than in the past. Property tax went down as far as percentages goes. It's kind of nice to see where your revenue sources are for governmental activities, so that you can plan accordingly.
So the sales tax kind of helped the property tax end of it.
Yeah,
Yeah.
made it smaller.
Okay.
So expenses for governmental activities, the pie, I think, stayed pretty much the same, except for public safety went down a little bit. It's because of decrease in pension expense. Culture, leisure, and libraries increased. That was 13% last year. This year, it's 16%. That's included, that increase was due to the street and alleyway projects and increased staffing. General government also went up. No, actually, it did go down by about 5 million, again, due to pension expense going down. So that one has a positive impact, but we know next year is probably going to go up again.
Okay.
So that's why these actuarial assumptions are very important. Let's look at the business type activities. So your business type activities include water, wastewater, environmental resources, golf course, and also the Oxnard Housing Authority. Like I mentioned before, the Oxnard Housing Authority, we don't really audit that. We just include that in the financial statements after another
they're-
auditor audits it.
But they were not part of the audit.
We did not audit it,
Right.
yes.
Okay.
So I actually don't know why this went up or down, but it looks like it's consistent with last year.
They have their own separate auditor. You go through
Correct.
their own separate audit.
So that's good to know for the public. Councilman Turan?
Oh, that was the point I was going to make too, is that they have their own separate audit,
Yeah.
and then the result of that audit's included in this report, is that
But
correct?
this way the public knows that they're separate.
Yes,
which I think
so
is
we're clear on that.
Thank you.
Correct, thank you for clarifying that.
Yeah.
So they provide us with their audit report, and then we included the financial statements within.
But no, we're talking about the utilities here, right?
Correct. So in the utilities, you can see the red bar is the revenue, and the purple bar is the expenses. So for water, for example, you can see the expenses exceeded revenues by around $10 million. And then wastewater, the revenues exceeded expenses. And then for environmental resources, expenses exceeded revenue. So
Was that about 4 million?
environmental resources and water are upside down.
So ER was, what, about 4 million difference?
About 4 million difference, yes.
Okay,
Yeah, in the environmental resources, expenses actually decreased from last year, but it still hasn't balanced out with revenues.
Councilman Basua?
No, I think it's really important to note how water and environmental resources are down, especially now with our water study. It's very critical that we allow the public to know that we just don't have the money for water. So I think this is going to be really, really important moving forward.
Good point.
Yeah, I think it would be good to know,
Councilman
it would
Toran?
be good to know too that I think some people are looking at last year. It's like last year was a good year for the utilities, and that's because there was a one-time infusement of the infrastructure use fee that were
Right.
reimbursed by the city to the water, wastewater, environmental resources. But now you can see, if you look at this one compared to maybe 2 years ago, it's really gonna, it really went down by a lot, and that's because your rates really did decrease as well, so.
Are you okay?
That does answer my question regarding those, and I think it is important, as Councilwoman Basua had mentioned, that folks recognize that we do have a fiduciary duty and obligation to make sure that our enterprise funds are operating in a way that is covering their cost of delivering the service. And, we just did a water rates workshop this past Saturday, and I hope the public can make that connection that we need to reevaluate these and on a regular basis to make sure that we are right-sized for our rates. And one thing that I made note of that I will bring up at the next meeting we have regarding water rates is I hope the public can think back to the previous decade when rates had to be raised and it hadn't been done at the regular interval that they should have been, and just how much harder of a hit that was for folks when we had to do it because we had no choice. And so I'm just hoping that that is able to connect for the public. On another note, the golf course, I do see that it appears to be operating in the black, and I know we receive questions occasionally about that, so thank you for including that as well. I'm glad the public can see that.
Yeah, I was gonna mention that they continue to be showing a positive bottom
right.
line. So I think that is something that, we need to take a look at like every year. Go
And-
over it when it,
And we want them to be self-supporting enterprises, really important. for the community.
I mean, it seems like a smaller, operation, but if it's upside down, we don't like to see it that way.
Okay.
And then the Oxnard Housing Authority has been consistently like that every year, so we'll just move on to that. So this is the end of our discussion on the government-wide financial statements. We will be talking about the general fund next, so do you have any last-minute questions on this?
Okay.
So on page 9, this shows the general fund group revenues and expenditures, including transfers. So in between 21 to 22, we had an increase of $43 million in revenues, and then we had a decrease of $13 million in expenses and net transfers. So the increase in fund balance is pretty sizable for this year. The revenues actually did increase actually, the general revenues increased, like the property taxes, sales taxes, all of those increased. Sales tax obviously had the biggest one, and I explained that before.
Good.
So just to backtrack a little bit, the governmental funds, which the general fund group belongs to, that's what we call the fund financial statements. So those provide you with the short-term inflows, outflows, and balances of spendable resources, short-term meaning 1 to 2 years. It provides you with that information that's useful in assessing what resources are available for the city to spend, and also it helps you assess the needs of city for financing. The city has multiple general funds. You'll find the governmental funds financial statements on page 28 to 33 of the ACFR. We disclosed like 4 major funds in there: the general fund, the Affordable Housing Fund, Development Fees Fund, and the state and federal grant fund. And then there's what we call the non-major funds, and there's plenty of them. I forgot to count them, so I don't know how many there are. So the non-major funds will include your special revenue funds like grants, and Prop A, Prop B, all of those transportation funds and all of that. Also, your debt service fund is included in there, and your capital outlay fund. So moving on to the next slide. For the revenues, like I said, all your all your taxes increased. So your taxes increased by 54 million, and all different types of taxes increased: property tax, sales tax, transient occupancy tax, business license tax, franchise tax, and deed transfer tax. All of them increased in varying degrees. Charges for services decreased by $2 million. So last year you had received your COVID CARES Act funds, and that's reported in the general fund. This year, the COVID ARPA fund is reported in a special revenue fund. So it's not included in the general fund group anymore. Other revenues, it did decrease by a lot, so it became half of what it was last year. And that's primarily due to the change in fair value of your investments. So your investments are presented or reported at fair value, meaning how it is going to be transacted in the open market. But of course, you don't really sell that investments. You keep it until it matures. So that is something that is reported, but not really tangible to you. Hopefully, this next year, it improves a little bit, but and also you have more interest. Interest has increased, so you could have more interest this year. For expenditures, I know this one looks a little messy and a lot of information in there. I just want to focus on a couple of things. So public safety, $102 million. Last year, it was $93 million, right there. So that was an increase of $9 million. That's mainly increases in personnel cost. So labor cost, we have some fire academy recruits, training of all of them, as well as employee benefits. So also cultural, leisure, and libraries increased by $7 million. And I think I already mentioned this in previous slides. It's because of costs related to parks and streets included in that. So I think that is the last slide.
Okay.
if you don't have any more questions, I'm going to go with our major takeaways. Do you have any questions?
Well, any questions right now? But just, go ahead. No, I just want to thank you for the presentation. Well, one of the important things when we first started, one of the more important things is the clean audit, cleanup thing, which is really, really great. And I think it's, I just want to thank, our financial, our staff, our city managers, and all the departments that cooperated with it and worked out really closely with it. And we had two little amendments that we had to do, but that was minimal, but I just want to thank you for excellent presentation, and staff, for all the good work, Sherry and the city manager and the finance department, for excellent work, That makes me feel really good.
Yes, thank you. And it makes me feel good as well that we are done.
Thank you.
Well, I
Councilmember-
just want to mention one last thing.
Uh-huh.
The S&P rating, that went
Ah,
very well as well. I forgot to mention that in my presentation, so I'm just gonna stick it in right now. So your general fund rating went up from A minus to A. Your
To A.
wastewater funds went up from A minus to A.
Oh, good.
And then city issuer credit from A to A plus.
Fantastic. That is good.
So, excellent. And one last thought, as you go into the next period, we don't know if, people are saying, are we gonna have a recession? People are saying, no, we're gonna have growth. So that's just something to think about and consider as you go into your next budget season here.
And even one of the things too, that for staff, that I know that S&P rating, that plus, saves us a lot of cost and interest, which I think is a benefit when we borrow money, it's like your FICO score going from 600 to
800.
800. There you go, which is really great for the people to understand that. Thank you, council members. Any additional questions?
So, Mayor, did we already call for public comment?
That
on
was,
this?
it's gotta be my next.
Mayor, we do not have any public speakers in person or virtually.
Thank you so much, and our recommendation is to then submit this to the city council and for evaluation, or for the annual comprehensive report and so forth. So what's the pleasure of the board?
I will make the motion to recommend that this report go to the full city council.
And second, okay, first by Councilman Duran, second by Basua. Please vote. I'm sorry, did you want to share?
Motion carries 3-0.
This is my first time here. I've been a resident for many years, since '82. I was going to sign in, but I didn't know where to sign in for.
Well, you're signed up now,
Okay, thank you, sir.
and then fill out, if you don't have to, but you can fill out it. Go ahead.
Okay, yes, sir. My name is Martin Ramirez. I've been a resident in Oxnard since '82. And I do own a business, it's Twin Tigers Taekwondo, and south of Saviors. And I just wanted to say thank you to the mayor, everyone, because we've been having issues on 3031, that shopping center where I'm at. I've been there for 30 years, and we've been having issues, and I just wanted to thank you because the officers been doing a tremendous job keeping it clean and clear from everyone who's been hanging out there and making our business kind of look bad. But I work with children. I work with 3-year-olds to adults, teaching them martial arts. And so just wanted to say thank you for the support and the officers being up there. Then I'm going to bring another issue.
This is going to be items that are on the agenda. Okay.
A little one. I remember when I first opened my business and I came to get my license, and the first person that I met was Donna Angel. I don't know if anybody remembers her. A tough court enforcer
Okay.
that I wish we had some like them again, because she would see something on the ground and she would come over and see me and tell me, first warning, second warning, you got a citation. And I used to like that, and I got used to that because I kept my place clean. The weeds that were coming out on the sidewalk, I would get them clean. But this morning, I was talking to one of my neighbors, and I was looking at my sidewalk and clearing mine and my neighbors and everything, and it looks green. And in the old days, it wasn't kept like that. But anyway, again,
Thank you.
I'm gonna keep it. I'm gonna do it again. But I mean, we need the code enforcers to do their job because alleys, some streets, they're not getting the jobs are not getting done.
Thank you for sharing. Thank you.
And please have them go out there and look around the alleys. You know, where I live, there's trucks. It looks like if they're ready to going to the city dump, but no, they've been sitting there for months or years. So remind the code enforcers to look around the alleys all over Oxnard.
Thank you so much.
Thank you.
Thank you.
That's it. Thank you.
All right, thank you. And we are adjourned. Thank you.